Hey everyone, welcome back to Corporate Decoder, the place where we take those dusty SEC filings that most people ignore and turn them into something you can actually understand. Today we are diving into a report from Union Street Partners Value Fund. This one is so exciting, it's like finding out your grandpa's stamp collection is actually worth something. It seems like this fund isn't exactly setting the world on fire. We will explore their performance over the last 6 months, focusing on where they're investing and whether they're making any money doing it. Before we jump in, if you're into getting straightforward explanations of complex business documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can discuss these filings with other smart folks. First, let's get some basic information out of the way. This is a semi-annual report, meaning it covers 6 months specifically from October of last year to March of this year. It's for the Union Street Partners Value Fund. The ticker symbol to look out for if you want to invest is USPFX for the advisor class shares and USPVX for the Class A shares. And USPVX for the Class A shares and USPVX for the Class A shares and USPVX for the Class A shares. And USPVX for the Class A shares 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 and USPVX for the Class A shares. These funds are offering tailored reports, which means it will be the same information, just presented in different ways. Let's check the expenses table in this report. What were the fund costs for the period, based on a hypothetical $10,000 investment? For the advisor class, the costs were about $56, which is about 1/15% of a $10,000 investment. For Class A shares, it's $68, which is 1/40%. Class C shares are the most expensive, costing 1/40%. Class C shares are the most expensive, costing 10. Class C shares are the most expensive, costing 1. This is how much they charge you to manage your money. 10, it seems like you're paying more for Class C shares than the others. So where is this fund putting all your money? Yes. Let's take a look at their sector breakdown. A little over 12% is in communication services, roughly 10% in both consumer discretionary and consumer staples. The big winner is information technology, taking up a little over 20% of the fund. Financials make up 15%. What stocks are they actually holding? To give, Microsoft makes up about 10%, Meta, Facebook, Apple, and JPM Morgan Chase are also big players, each taking up around 8-9%. Everything else is below 4%, so it's not as significant. Let's get a quick snapshot of the fund overall health. After the fund net assets are roughly $74 million. That's not bad, but it's not huge either. They have 25 holdings, which means they are investing in just 25 different companies. That means less diversification, which makes the fund more risky. Their portfolio turnover rate is about 7%, meaning they don't actively change much of the stock that they hold. Let's dive into the actual financial statements. This section usually gives us the clearest picture of how the fund is really doing. And here we can see a more detailed schedule of investments with exact share counts and valuations. This allows us to see what stocks are actually being bought and sold and how they are being valued. Now let's take a look at the statement of assets and liabilities. This statement gives us a snapshot of what the fund owns, its assets, and what it owes, its liabilities, at a specific point in time. So the fund's total assets are about $74 million. Total liabilities are a very small number at only $48,753. That's good news for them. Net assets are $73 million. Total liabilities are a very small number at only $48,073.90. Small number at only $48,073. That's good news for many dollars. Here it is, the statement of operations. This is where we see how the fund performed over the last 6 months. The total investment income was about $712,000. Not bad, but the expenses really eat into that. Total expenses ended up being about $485,000 after fee waivers. So after all the math, the net investment income is only about $27,000. But here's the kicker. The fund actually lost money on its investments. Net realized and unrealized losses on investments were over $4 million. This basically means the fund performed poorly. Let's check the statements of changes in net assets and see if the longer term trend matches with my suspicions. From operations, the fund is down almost $4 million. After including sales and Redden dollars, AB dollars, $58 million, and ending with about $74 million. Now for the financial highlights quote. What we find here is confirmation of everything mentioned so far. It shows a few key metrics like net asset value, investment activities, and total return for the past few years. And for Class A shares, the total return was negative 5%. The expenses are 1.4% of assets. This is a summary of everything we saw so far. Looking at these results more broadly, the fund is heavily invested in information technology stocks, which is a strength if tech continues to grow, but also a risk if the market changes. The costs of running the fund are high considering the relatively small size, and that hurts returns. Overall, the Union Street Partners Value Fund isn't very bad, but it's not the most amazing fund either. Fees may be a little too high and concentrated investments can be risky, but it's a mixed bag. It really depends on what you are looking for, but hopefully this report gives you a clearer picture about it all. Alright, that's our breakdown of Union Street Partners Value Fund's latest filing. What do you think about these numbers and what they indicate for the fund's future? Drop your thoughts in the comments. If you found this analysis helpful, hitting that like button helps, and subscribe for more financial report deep dives. Don't forget to check out the Discord in the description for more discussions. Thanks for watching, and I will see you next time.